why the public refuses to see what I see so clearly, what you see so clearly, what people listening to the show see. Nothing, we haven't seen anything that would lead me to believe that we are that close to that moment where crossing over that Rubicon where, look, I mean, just based upon industrial and monetary demand versus a second year in a row of shortfalls in mine supply, it should be a whole hell of a lot higher. Not to mention so many of these deals that we're seeing where silver is disappearing off of the exchanges. Where's it all coming from? Where's it all going? And why aren't the prices reflective of it is a mystery to me. But I believe it will, like that, switch.
In a constantly evolving global financial landscape, investors seek opportunities to safeguard their wealth and diversify their portfolios. With a proven historical track record of retaining worth during market downturns, silver stands out amidst underperforming assets like stocks and bonds. Over the past decade, the consumption of industrial silver has steadily risen, accounting for approximately 50% of the total demand. This surge is primarily attributed to the robust growth in electronic and electrical applications. Last year, global silver demand surged by an estimated 17%, reaching a new high of 1.24 billion ounces. Projections for this year indicate a slight dip to 1.15 billion ounces, yet still marking the second highest demand level on record. Interestingly, despite being considered a haven and experiencing burgeoning industrial demand, the price of silver hasn't reached the expected highs. October witnessed a tumultuous start for silver, with an initial 5% drop on the first trading day, swiftly followed by a commendable recovery by mid-month. Analyzing the medium-term trends reveals a consistent pattern of declining highs and lows in the past 6 months, indicative of a bearish trajectory. Reflecting on the current state of the silver market, Andy notes the discrepancy between observable demand, both industrial and monetary, and the recurrent deficits in mine supply for 2 consecutive years. He emphasizes the vanishing presence of silver from exchanges, direct sourcing, or via ETFs, pointing out substantial deliveries to nations like India and China, coupled with notable imports in Turkey. Yet, these market activities have not corresponded to price adjustments, leaving observers puzzled by the lack of impact on silver prices. Andy criticizes mainstream channels for overlooking price differences in gold and silver markets, foreseeing deliberately suppressing Western prices. He anticipates a time when these suppressed prices won't attract significant metal inflows. Furthermore, the record 374.1 tons of gold, bought by central banks, as reported by the World Gold Council, hints at shifting financial perspectives between Western investors and the global market. We will present clips from Andy Schectman's interview with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Why the public refuses to see what I see so clearly, what you see so clearly, what people listening to the show see so clearly, and what it will take for that awareness to be brought to the forefront. We're not there yet, not even by a large margin. We're not there. But yet I really do believe it's coming. And for those who have been cost averaging, those who have been de-dollarizing, well, you've picked a great time to do it. You're not too late. A lot of people think, well, maybe we're too late. No, you're not even close to it. So it's a great time to be accumulating gold and silver. I think there's very little downside in silver right now and massive upside. So no, nothing. We haven't seen anything that would lead me to believe that we are that close to that moment where crossing over that Rubicon where, look, I mean, just based upon industrial and monetary demand versus a second year in a row of shortfalls in mine supply, it should be a whole hell of a lot higher. Not to mention so many of these deals that we're seeing where silver is disappearing off of the exchanges. It's being done so in a way that it's very difficult to see. It's like being taken right from the source or coming out of the ETFs, or, you got 60 million ounces that were delivered to India in the month of October, 10 million ounces into China in the month of October, 25.8 million ounces in Turkey in 2023 in silver imports, all of 3.53 million ounces of silver that came out of the ETFs on Friday of last week. I mean, so, where's it all coming from? Where's it all going? And why aren't the prices reflective of it is a mystery to me. But I believe it will, like that, switch. I don't know what the switch is that triggers that moment, but in my heart, so help me God, I believe that's coming. You know, how many mainstream channels were telling you that gold was priced $100 higher in Shanghai and silver $2 higher than on the LBMA or the COMEX? Not a damn one. They're all pathetic. You got to hear it from me and you and Vince and, you know, all these people that are saying, why is this happening? And then some of them would give us lame excuses why. No, it's not. It has nothing to do with currency controls or any of this crap. It has to do with the fact that they're smart and they realize there will come a point where this make-believe COMEX price will not be enough for people to let go of the metal. And I think if you slowly turn up the heat, you will end up arbitraging a large portion of it. I think that's exactly what's happening. And I think it will continue to happen because this make-believe Western price, I think, is people are going to think twice before selling large or delivering large amounts of metal at these prices or specifically being naked short in this environment, I think is a recipe for disaster when you have sovereign nations like China standing for delivery. I think it's that the world knows that the debt path that we are on, Chris, is not sustainable anymore. I think that's really the bottom line of it. They realize that a new monetary regime is coming where it will be tied to gold and silver. This is why you're seeing the massively increasing central bank purchases where, you know, you got the top 33 central banks right now are averaging 66 tons of gold per month. That's almost 3 times higher than it was on average over the last 5 years. You got the banks, they're doubling down their acquisition of gold and of silver and of copper and of all of the rare earths and everything they need to build a war chest. And the people in the West are fixated once again on debt instruments and opaque promises. And the rest of the world is miles ahead of the sophisticated investor in this country who will wake up and be totally screwed and get hit in the head by a 103-mile-an-hour fastball because they didn't see it coming.
Last year, global silver demand surged by an impressive 18%, reaching an all-time high of 1.24 billion ounces, creating a substantial supply deficit, as projected by the Silver Institute, with expectations of persistent shortages ahead. Andy highlights the significant disparity outlined by the Silver Institute between declining silver mine supplies and the surging demand across industrial and monetary sectors. This discrepancy underlines a profound imbalance, with the supply of silver dwindling while demand from diverse industries intensifies. Notably, the surge in demand spans various domains, encompassing technology, industrial applications, and even the critical military-industrial complex. These rising demands occur amidst global geopolitical tensions, rapid technological progress, and widespread doubts about traditional fiat currencies. While acknowledging the evidence that silver seems undervalued, Andy notes that this hasn't yet translated into rising premiums or decreased availability, surprising him considering the current trends. He predicts a moment when the market will shift drastically, possibly triggered by a banking problem, leading to a chaotic environment where availability diminishes, premiums soar, and the market moves in the opposite direction of the current status quo. Let's get back to the interview.
I think we're on the cusp of it. It's one of these deals where, you know, fool me once, shame on you, fool me 775 times, shame on me type of deal where, you know, we're right there at the moving averages, we're right there at the cup and handle, all the technical indications, all of the convergence of the, you know, the rising wedge, and all of these technical indicators say we're right there. And the world, the events say we're right there. We're living on borrowed time, and it hasn't happened. And I think that's, you know, what have you done for me lately type of deal. And while there's a piece of me that is wholly optimistic that we will see the price move into a territory where it actually deserves to be. I mean, you know, you mentioned just at the onset here that you were on a site visit. You were visiting a mine in Mexico, and I think that's interesting because, you know, if we look at that from a standpoint of what's been going on with mine supply, we read from the Silver Institute that silver mine production fell to its second lowest year ever over the past 10 years. with the exception, I think, of last year, which was lower, if I'm not mistaken. But at the same time, industrial demand grew to its highest level ever. So you have a weak supply and a very strong demand. Not to mention, the last 3 years have been really hallmarked in this industry by silver demand, more so than gold. So you have industrial demand rising, you have monetary demand rising, and according to the Silver Institute, you have mine supply, falling for the second year in a row. And all the demand for silver that is growing in a world where wars aren't stopping, where green and digital aspirations and utilities are not ceasing, where people are questioning fiat currencies. And I think in many respects look at silver not as an industrial metal, but as money. It is ridiculously, and this is all evidence that it is ridiculously priced too low, in my opinion. But it hasn't translated yet into rising premiums, into decreasing availability, or into an increased awareness to the mainstream. Shockingly, it hasn't. In my mind, I believe we will see that moment. I don't know when it will be or what will trigger it. I guess I believe it will be something to do with the banking problem. But it will come to a point where we will have an environment like we see now, to 180-degree difference, one that will be chaotic, one that will be in an accelerating fashion. It will go from flush availability and low premiums to the antithesis of that, to the opposite of that, to more of what we've seen over the past 4 years. So honestly, I mean, it's like we've bottomed out on premiums, and the wholesalers and the retailers are flush with products. So it will go down. Maybe after it all plays out, there'll be greater clarity. But to me, Chris, it goes down right now as one of the greatest mysteries of my career.
Despite robust demand from industries and investors seeking safety, suppressed silver prices might persist, creating a market discrepancy. This disconnect could prompt a re-evaluation of silver's actual value globally, potentially reshaping investor and industry perceptions. How will the ongoing disparity between strong demand and suppressed silver prices reshape its perceived value globally? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.